Do you think stock market will continue to compound over next 10 years, 15 years, 20 years? Or do you think the golden period is behind us now?
I do think that India is the best emerging market opportunity.
What sectors looks attractive to you?
Discretionary consumption in the economy will explode as we go forward.
For my long-term portfolio, 3-4 parameters that could give me some comfort to say that these companies are likely to sustain over the next 15 to 20 years.
You figure out approximate value of a stock, and if the current price is significantly below that, you buy, and if the stock price is significantly above that, you sell. That's a simple game.
Raamdeo ji, thank you so much for giving me your time. Before I start, I just want to say something that I've been listening to you for over 10-15 years now, and every word you speak resonates very well with me. So I've learnt a lot, and I just want to say thank you. And it's truly an honor for me to be sitting here right next to you and doing this interaction one-on-one basis. So once again, thank you.
Yeah, thanks.
Raamdeo ji, I want to start this conversation on the fact that one is the short-term view that we have seen in the market. There is a lot of noise, etc., which to me appears to be short-term. Therefore, I want to focus my conversation on the long-term wealth. India has recently crossed $4 trillion mark from a GDP perspective. Our economy seems to be doing well. It's compounding. What about stock market? Do you think stock market will continue to compound over next 10 years, 15 years, 20 years? And therefore, there is still a lot of wealth to be made? Or do you think the golden period is behind us now?
Yeah, thank you, Rahul. Actually, what I have seen in last 45 years of the market, and a lot of things happen. Sometimes Y2K happens, sometimes global financial crisis happen, or so the world economy keeps moving at particular rhythm, say 4-5% dollar GDP growth continues for last not 40-50 years, but even 100 years. So world economy has been growing, but actually one of the most important things is the financial wealth creation has been significantly faster. So world GDP has grown about 5%, whereas the world market cap has grown 7%.
Right.
For if you do it for 75 years, 2% gap is a lot. So in last 75 years, the GDP has moved by 117 times. 1 trillion was GDP of the world in 1950. Today it is 117. But market cap was 200 billion only, which has become 147 billion. So actually it is up almost 700 times.
Right.
GDP is up 117 and market cap is up 700 times. That's the pace of wealth creation which has happened. Now, there is no reason for me to believe that this machine is going to stop. This AI and all those things keep happening. These technologies will come and go, and they'll make actually the world better. Computers came. There were no computers till 84, 85.
Right.
There was no internet till 2000. So those are also massive innovations, isn't it? There was no mobile phones. India was unconnected. Can you believe this? Till 2003, nobody had phone. Today, 1 billion phones are there. Everybody is connected.
Right.
So these kind of changes will happen. Even AI is something in that direction. There's a lot of excitement of the new technology. Like this is what happened when internet came in 2000. Again, there is a lot of excitement, and the diffusion, the absorption of technology will happen at a pace.
Right.
It is not, nothing is going to happen overnight across all this thing. So there is a lot of fear. This time, first time it is happening that this innovation has a lot of fear of loss of jobs. So my sense is there will be a lot of loss of jobs and of the existing jobs, and a lot of new jobs will be created.
Right.
So there is a lot of retraining also involved. So let's see how it comes out. But I don't have any doubt that the pace of wealth creation in the world markets will actually maintain or might even accelerate with the faster technology.
Right. Right.
But the winners and losers will be different. So the top 10 in 2000 in US or the world was different. Today it is different. So I am pretty sure top 10 in 2050 or 40 will be different companies than what they are today.
Right.
Now, which are those companies, where they are, what is the size, I don't know.
Right. So in the upcoming years or the decades, if we go with the story that India will continue to grow, not only from GDP perspective, but from a capital market perspective,
Yeah.
what type of investors are likely to win, and how do investors ride this wave? Because there are two types of investors: one who lose money in stock market and then they get scared away, and then they never come back for right reasons or wrong reasons, and then there are others who end up creating huge wealth for themselves. For the next 15 years, what do you think are the type of investors or the traits of the investors that are likely to win and ride over this wave?
See, all the problem with the market is that people are in too much of a hurry to make money.
Right.
Or they become, the moment they come to the market, they become very greedy. In fact, the greed only brings into the market. Okay. And there is no fancy stuff happening here. The market has done about 12-13% index. If you are very good, you are in the right hands, maybe you can make 2-3% more. So when market does 12%, you should be very happy to do 15-16%. That's what is this thing. But you ask anybody, nobody wants to make 15%. Seriously, they don't want to make 15%. Everybody is interested. Even I think that I should make 25%. So if with all this wisdom, if I think that I should make 25%, the outside guy is very right in expecting 30-40% return. Right. But the potential of this market is 12-15%. That's what it, even I make 18% actually. My 10-year across the board IRR is about 18%.
Right.
So far. Last year has been bad for me. We have done just about 5-7%. So we have underperformed the index actually across the portfolio. So those things happen. But on a 5-year basis, I have done 18, on 10-year, 12-year basis, I have done 18-19%. So that is the most important thing to understand in the market, that you can make money at double in 5 years at 15% or 4 years at 18%. And we are very successful for some phases. You buy a very depressed market, you might make double in 3 years also.
Right.
But if you took a longer period, I would think double in 5 years is what should be the expectation. And if you are around that, if you are -1 +1, you should be very happy.
Right. Okay.
And there is no reason why an investor, see, the traders, the guys who are speculating, they are bound to lose money. Not 90%, 99% of money guys will lose money. But this is a market where both speculator and investor, both they meet at the same point, at the same place. And there is a very little difference between a speculator and investor.
Right.
So if you are an investing type, if you are an investor fundamentally, there is no reason to be concerned at all. And if you are happy to make 15%, you are welcome. And everybody will make money. But the guys who are, and you don't have to be too brainy also. आप जितने कॉमन सेंसिकल बनोगे, सिंपल बनोगे, उतना इजीली आपको 15 का बनेगा. The moment you try to become very sophisticated, very fancy, you do some crazy stuff, you'll lose out.
Right.
This is not the place where action wins. This is the place where patience wins.
Okay. No, this is very good. Recently, we have seen, not recently, I would say last 5 or 7 years, we have seen FIs not buying Indian equities to the pace that they were, in previous decades. Do you think it's short term? That's first. And then secondly, what could bring FIs back to Indian stock market in a big way, or do you think that may not happen now and it's just because DI's flows are now very robust and therefore they are, giving that cushion to the market?
No, definitely. See, FIs have option to go to other markets.
Right.
And in other markets also same kind of stocks are listed. If I'm getting in China at 10p, something which is here at 30-40p, where should I go, you tell me? I'm sitting in New York and I'm getting some stock at 10p and here I'm getting at 30p. So what I will do, I have already allocated say $1 billion for the emerging market.
Right.
I'm sitting in New York. Now I have done very well in India. Okay. And my other investments have not done that well. But now those markets are at half P to India. Some stock is. So what I will do, I'll sell here some portion, not all, some portion, and put that money in other markets' money. So India becomes a funding market. Unfortunately, we are not allowed to go out. I mean, India is very
contained
kind of thing. So we are not able to go out. So arbitraging between the rest of the world and India is through the only pipe of FII.
Right.
If it was open market, then the parity would have happened much earlier.
Right.
Before stock went to say 25-30p, instead of buying here, the domestics would have gone outside and bought it.
Right.
Some $200-300 billion. But that didn't happen because there is a restriction on outflow. So the only way to arbitrage between the rest of the world and India is through FIs. And FIIs will do it only when India, they will come in here only if India becomes attractive in their own eyes. Not, it doesn't mean that if China is 15, India at 20 is expensive. No, they have some parity. You know, like house prices are different. In the same location, house price can be a lakh rupees per square feet, and the next door it could be 75,000. So like that, every country also has a different country premium. So if India is the one of the best emerging market opportunity, I do think that India is the best opportunity, emerging market opportunity. So you'll get a valuation premium of some 20-30% over the rest of the emerging market. But if the premium is 40%, you have to wait for that day to come. And if it never comes, they will never come.
And if you look at the current market valuations, do you think we're stretched in terms of valuations, and therefore
I would not. I will just look at their behavior. If they come, it means that now the parity has come. If they are going, it means that there is still some time.
Okay, that's how you will read it, other way around.
What is the other way? Because there is not one guy, no? There are hundreds and thousands of them. And some guys are coming, some guys are going, somebody is trimming, somebody is adding. So you can only understand only from and there is no maths to this.
Raamdeo ji, if we look at Indian market right now, and from a long-term investor's perspective, what sectoral bets or what sectors looks attractive to you from a growth perspective? And there you feel that risk is limited. So the risk-reward ratio, as we call it, is attractive compared to other sectors.
See, discretionary consumption in the economy will explode as we go forward. When we go from 4 to 8, 8 to 16 in next 15, 20 years, the basics will tend to stagnate or grow slower, and all the discretionary items, they will grow much, much faster. You know, say, so automotive. Now, automotive is not a basic industry. In that, now in automotive, there are two parts. One is a two-wheeler and second is a four-wheeler. So four-wheeler will go at much faster pace than two-wheeler. And within two-wheeler, premium segments will grow faster than the basic segment. So like this, as the economy becomes prosperous, this is what is going to happen. So I would focus on all the discretionary end of the economy, whether it is in services, whether it is in products or consumer consumption, anywhere. You will find those companies, and then the limited competition should be there. The growth is going to be high, competition is limited, the companies are going to make a lot of money. So automotive opportunity is very large. Very, very large. Even say real estate is very big opportunity. You know, but what happens is in automotive, there are only 2 or 3 car companies and there are 2 or 3 motorcycle companies. So all the automotive supplies have to be made by these 3-4 guys or 7 guys. So buy an automotive ETF and you're done. If the automotive boom has to happen, you'll mint money out there. You know, some may not do, some will do very well. You know, those kind of things will happen. So automotive, my sense is automotive boom is going to be pretty big. So that is how I look at sectors, you know. So that is one. Then you have all the capital market things. Savings are going to be ballooning. I mean, we are talking about upwards of $40-50 trillion of savings at par in next 15-20 years. So all the savings management institutions like AMCs, wealth management companies, broking companies, all these market intermediaries, exchanges of all, they'll all do very well. Even banks will do very well. So insurance companies will do well. So you have to figure out, so sectorally, very broad brush opportunities are there. The issue is then you have to go and figure out, if you are a direct investor, then you have to figure out which company is going to do well. So now finding stocks are going to be tough for the retail investors. So they are very well placed if they go to expert managers, you know, the mutual fund managers, AIF managers. They will do that job for them. So most of the retail investors across the portfolio, forget about a stock, across the portfolio, they don't make even the index return. It is, I mean, and nobody judges their portfolio in a proper way. So if they do their proper evaluation of the portfolio for 10-15 years, they will realize that they are barely able to manage even the index return. So this is a time for them to rethink and go about managing money through somebody else.
Raamdeo ji, you mentioned auto sector. Now, for example, recently the news came between India-EU deal, and the announcements were that gradually India is going to reduce the duties from whatever 110% to 10% over, let's say, 5 years time period. And the cars that are produced by EU manufacturers, be it Volkswagen, etc., they're going to be really, really cheap in India. Now,
no, it won't be that cheap. I think they have said, 15,000 or?
15,000, more than 15,000
$15,000.
euros.
Yeah, 15,000 euros. That is almost like a 20 lakh rupees.
Correct.
So 20 lakh rupees के कार यहाँ पर नहीं बनता ना सब.
Right.
So that is a basic. The basic, not with the duty.
Of course.
So at 20 lakhs rupees ex factory price, how many cars we are making? None of the cars are being made there. So so domestic car industry is fully protected at the current juncture.
Right.
But as we go forward, as the luxury cars become cheaper, say Mercedes, which is costing us say a crore, that starts being available at 60-75 lakhs. उससे ज़्यादा क्या नीचे आएगा? So if it comes to 65-70, obviously they are selling say 20,000 cars in the current year. They might end up selling 40-50,000 cars.
Right.
But still, in a country where we are making number of cars like current year we are making about 5 million cars. My sense is in next 15 years we would be anywhere between 15 million cars.
Right.
In that, this luxury cars will also expand, you know, but then the numbers will be smaller, value wise will be much higher.
Right.
So I don't think they are threat to Indian car manufacturers, but they themselves, and then at some point of time they'll say, boss, we would like to produce in India itself. If the volume is there, instead of 20,000 Mercedes, if you start consuming 200,000 Mercedes, they might set up a factory here.
Absolutely. Another few sectors that we keep hearing from a government policies perspective, for example, data centers. There's a I don't know, up to 2047 there is a tax holiday given to companies, right? How do you see those themes which are just starting at a very early stage?
I mean, these are the budgetary announcements, but let somebody present me. I should have investable idea also. Now, what is the point in just talking about it?
Right.
Which are the companies which are setting up data? Which are the data center companies? I can buy cables, I can buy transformer companies, I can buy some switchgear company. But per se data center setting up companies, I mean, whose business is to set up data centers,
right,
that is still not around. So once that comes, those opportunities come, we'll examine.
Right. And what about quick commerce segment where, a lot of companies are now coming up with the IPOs, etc., where except one, majority of them are not even profitable, making losses.
Yeah.
Do you think that could turn around in next 5-10 years?
It should turn around. That's what my optimism is about them. Because this is, this is one sector where maybe $200-300 billion companies will come. So, see, now the consumption habit of the housewives have changed. I don't think they are going to buy grocery the way they were buying earlier.
Right.
So once that consumer behavior has changed, they have to pay for their consumer behavior. See how long they'll keep funding to you. See, right now to spoil your habits, they are giving you free of cost delivery and those kind of things. But the moment you're hooked onto their services, then they'll say, boss, start paying $50, $25, $30, $50, and then they start making money slowly. Maybe for a year or so, they have private equity money. They will not be profitable, but they become humongous companies.
Right.
They are talking about 40, 50, 60,000 crores turnover. With of course 1,000, 2,000, 3,000 crore losses. But I would think that they'll become 1 lakh crore, 2 lakh crore companies in terms of turnover, and then slowly they'll start making money with 1% net margin, 2% net margin, and eventually I would think that in next 7-8 years they should be more profitable than most of the commerce companies. So they could be making 3-4% net margin on a very large turnover.
If we look at the entire market into large cap, mid cap and small cap lens, in the last few years, mid cap and small caps have done superbly well. Do you think, and if I look at large cap, there are companies which have crossed, 10 lakh crores of market cap. Where do you see more value coming up, let's say in the 5 to 10 years?
Right now, more value in large cap.
Right.
Yeah. But small and mid cap can grow very fast. So the story of mid and small are not going to go away, because in a growing economy, a lot of new small and mid cap also come up.
Right.
So it's not that as a category they will do badly or anything like that. But large caps are reasonably priced. So I think you can't say that large cap will do better than small and mid cap. But yes, a probability of finding more reasonably priced stocks is there in the large cap rather than in small and mid.
Since you're talking about finding stocks, and I've read your wealth study that you do, and I was looking at the various criteria that have been used to select the consistent compounding stocks or companies rather. If for my viewers, they want to understand how do we go about, let's say auto is an example that you took, and let's say I want to find out good quality car manufacturers for my long-term portfolio. What do I look into that company? What are, let's say, top 3-4 parameters that could give me some comfort to say that, you know what, these companies are likely to sustain over the next 15 to 20 years of time period?
So for any stock, the QGLP framework, that's what I do. I look at, I have the QGLP framework: quality, growth, longevity at reasonable price. Whether it is auto company, tech company, capital market company, or whatever it is, the framework remains same for me.
Right.
So when I find top quality business run by top quality management, see, in fact, you're 99% you're done. Outstanding business run by outstanding management. Then don't see what happens is most of the people, they first look at the valuation and then they look at the company.
Right.
So you are trying to value something which you have not understood. So first to understand the company, and the way to understand the company is that first you see the quality of business, even without looking at the name. What is the quality of the business? How well the business is doing? And how do you understand that? What is the return on equity or return on capital employed? If the company has a 10-12% kind of return on capital employed, what are you doing? You've got to look at a company which at least makes 20-25% return on equity. That's where the automotive companies are very interesting. They are going to, the return on equity is 25, 30, 40%. So higher the rate of return, better it is for anybody. So does it structurally have a high return on equity, and what is the source of it? That also you have to understand. So once you understood that this is outstanding business, then is it managed by outstanding management?
Right.
So that outstanding management means what? You have to have basic competence of the management. Second is he growth mindset? And third is he of the impeccable integrity? So once these three things are there, he's passionate, his integrity is high, and he's very competent in what job he's doing. Once this thing comes, so you have outstanding business, outstanding management. You are looking at outstanding company. Okay. Now you have to look at whether it is available at outstanding price.
Right.
Okay. So outstanding price you will get when outstanding companies are known to the market, it can never be cheaply available. Only in adversity you can find them cheap. So you have to figure out that is the underlying, so there are two things, price and value. So first you figure out value, and value is by outstanding business, outstanding management, growth, and at what price it is available. And if it is at reasonable price, you buy and then you sit tight. Let the magic of outstanding business and growth return you the money.
Raamdeo, sometimes it happens that, let's say, we have done all of the homework, and we say that X stock is doing really well from a profitability perspective, balance sheet cash flow is very, very good, and valuations looked okay when I looked at it. But then all of a sudden, it's down by 10%, 15%. So it means my then study was possibly incorrect.
Your understanding was wrong, or the company, basically, we can blame only ourselves. No, company is what company is. If the company is wacky, it will remain wacky.
Right.
We didn't understand while buying that company was wacky.
Right.
And you should also have capability to, after you are buying, because stock doesn't know that you have bought the stock. You only know that you have bought the stock, but stock doesn't know that you have bought it. So at whatever price you have bought, stock is completely immune. So there will be fluctuations. It's not that just because you have bought, the stock is duty bound to not go below that. So the stocks may come down by 25-30%. I have stories after stories on this. Say, stock I bought in 2004, till 2014 nothing happened, and that between 14 and now it is up 50 times, and I'm still sitting. So 7-8 years nothing happened, but the value of the company kept on growing. See, there is a value machine, there is a price machine. We are all focused on the price. All the noise is all about the price. Nobody talks about the value. Your questions are also all about the price, because your listeners, they can only see the price, they can't see the value. And that's the most beautiful part of the stock market. So you as an investor, you have to see the underlying value. When you go to buy gold, you are not You're not paying 2,50,000 or 3 lakh or 4 lakh just like that. You're buying 10 grams of gold.
Right.
So how many grams of gold you're getting when you're buying a Reliance or a Telco or Tisco, that you have to figure out.
Right.
And that's a kind of little tricky stuff. Over a period of time or some common sense, or there are many ways to figure out what is the underlying value.
Right.
So that's where you have to, it's experience and reading and practicing, you figure out what is the approximate value of a stock. And if the current price is significantly below that, you buy, and if the stock price is significantly above that, you sell or stay away. That's a simple game.
So the selling part, and you gave an example that, that stock from 2014 to now went up by X times multi-bagger returns. Then do you still continue to hold it because there's a value in that?
I'm buying more.
Right.
Because it is as cheap as I bought it in 2004 again.
So you've totally ignored whether it's gone up by 50x or 100x. It's whether it is giving me the value or not.
Economy is also bigger. I'm also bigger. Everything has changed. Between 2005 and now, there is no comparison with the scale. The scale is different.
Right. Sir, one question also I wanted to ask you is, which sectors are not likely to perform well in the future? Are there any sectors that you think, they are almost dying or sunset is happening or about to happen?
I don't look at negative stuff. So I'm basically an optimistic guy.
Right.
And so I focus only on the positive stuff.
Okay.
So I'm not bothered too much about who's not doing well and why they don't do. Like I was just looking at all the quarterlies on screener. So I was focusing on the companies which are making more than 25% bottom line growth.
Right.
I didn't bother about the companies which are
10% or 5% or minus.
5% or even below. I didn't bother about them.
Right. Okay.
So I'm not the right person to tell you that.
Okay. Thank you for that. I'm just going to ask you some rapid fire questions, if that's okay. Quick questions, quick answers. Who is your favorite investor that you look up to? Is there anybody that you admire?
India?
In India or globally?
Globally, of course, Buffett side. Warren Buffett, yeah.
What's the one biggest secret of equity markets as per you?
Everybody knows the price, but nobody knows value.
Where do you see Nifty by 2047? Our goal of becoming a developed country.
Yeah, so it will be 47 is simple. 4 doublers, 2 raised to power 4. 2, 4, 8, 16, 32. 2, 4, 8, 16, 16 times.
16 times.
So it should be about 2 lakh.
2 lakhs. Any market falls have ever scared you so far?
92. When first time I saw that, we had barely made 30 crores from zero, and then it collapsed to 10. I felt bad. Not that I was scared, because we went from 0 to 10. That itself was big. But 30 coming out of 10. So it was the first time for me to see this kind of collapse. So I was a bit concerned.
Right.
Not that run away or anything like that. But yes, that was the first experience of collapse.
What's your advice for investors who invest in direct stocks?
What should be go through your process. Have a guru. Have your own process and stick to that.
Do you think young people should look at stock market as a full-time career?
If you are passionate about it, why not?
If you were to go to dinner with a celebrity, who would that be? I know you yourself are a celebrity, but still, if you were to go out on a dinner on a lighter note, who would that be and why?
I would like to go in. So you are talking in context of some learning or
anything. It could be anything that you admire, any individual that you admire for whatever capabilities that they have.
Yeah, why not? I would like to go with our Prime Minister Modi
ji.
Yeah.
And who should I invite? Any suggestions for me for my next episode? Who do you think I should invite as a guest? Any recommendations for me?
Whosoever your listeners want to listen, because now everybody knows who's who. So you go by listeners' appetite.
Brilliant. Thank you, Raamdeo ji, for your time. Thank you so much.
Thank you.
If you haven't yet subscribed to our channel, humble request that you hit the subscribe button now, because your subscription is our motivation. My team and me gets really motivated once we see your subscription. So please hit the subscribe button now, and I'm going to see you very soon. Until then, keep rocking.